content, please like, subscribe, and leave your thoughts in the comment section down below. So this video is going to be broken into different sections. First, we're going to talk about a brief introduction to multiple time frame analysis and why it's important for every trader. Then we're going to talk about the higher time frames. Then we'll move down to the lower time frames, and then we're going to talk about trade executions on the lower time frame. So to get started, the reason why we carry out multiple time frame analysis or technical analysis in general is for us to get as much information as we can on the chart to help us make informed trade decisions. So what I see most traders doing is that they trade on just one time frame. So they stick with either the 1 hour time frame or the 30 minutes time frame to carry out their trade predictions. Why this is faulty is because if you don't navigate through the higher time frame, you'll be leaving out a lot and a ton of information that will actually contribute to helping you make the best trade decisions. So moving to the higher time frame, the reason why we start from the higher time frame is not because we want to get trade opportunities on the higher time frame. The reason why we use the higher time frame is because we want to understand where the price is headed, where the price is coming from, and possible areas in which we are likely to close our trades, open our trades, or just get more information about the chart to help us make informed decisions. So most people think if you're analyzing charts on the daily time frame, it means you have to take your trades on the daily time frame. That's not the case. So on this chart, this is a good chart on the daily time frame. So what we're doing on the daily time frame is we're trying to determine possible trade opportunities or get more information on the good chart on the daily time frame. So what we can see right now, so this is just a partially zoomed out version of the gold chart on the daily time frame. So what we can see on the chart is that we had price moving to these highs here, and you can see all the way from these highs down to these lows was a bearish trend. So this was our opportunity to carry out bearish trade opportunities, right? To carry out to open bearish trade positions. So we had a triple bottom which sent price higher. So the triple bottom formed on gold here was what led to the bullish movement we currently have on gold. So the current bullish trend on gold was as a result of this triple bottom, right? So this is what we can see on the daily time frame. So if you zoom out more, so sometimes when you carry out your market analysis, most times you do not need to go all the way to the monthly time frame or the weekly time frame. You can simply get more information by zooming out your charts, right? Like I just did right now. So when we zoom out, you see gold actually started with a bullish move, right? So we had a bullish move all the way from 2018 to these highs, and now it seems like we are ranging around these price levels, trying to break the resistance to go higher. Okay, so if you need more information on gold, then you can go to the weekly time frame. So if you think the information on the weekly time frame is going to contribute to your trade result on the lower time frame, then you can go to the weekly time frame. So on the weekly time frame, you can see excuse me, I'm just going to try to get a better chart because the current chart has little or no price action. So XAUUSD. So the reason why I use it on there right now is because we have more price action display on the chart compared to the other charts we're using. So as you can see, this is our resistance level, and zooming out or going to the weekly time frame, you can see that we had a first high, but the current highs we have on gold are the all-time highs. So if we break through these highs, it means we are currently going to be in price discovery because this is the highest high we have on gold, right? So this is all the information we can get on the higher time frame. So going back to the daily time frame, so remember, you do not need to go as high as the weekly time frame, only if you know that the information got on the weekly time frame is going to help you make better trade decisions on the lower time frame, right? So remember, the higher time frame is where or is how we get more information on the chart, while the lower time frame is where we carry out our trade executions, and I'm going to show you all that when we move down to the lower time frame. So still on the higher time frame, so this is daily chart, and this is our current bullish trend, right? So what you do on this chart is that you mark out significant area of values. So on the daily charts, it's difficult for me to mark out these levels because the charts or the candles are closely jam-packed. So what I do is I can go down to the 12-hour chart in order to spread the chart across the screen, so it's easy for me to carry out my analysis on this time frame, right? So this is our triple bottom, remember, and that's what led to this bullish trend. So on 12-hour time frame or on daily time frame, we are working with this current trend, and the trend is bullish. So we want to carry out buy trade opportunities, right? We want to look forward to going long, look for opportunities to go long. So what we do is we mark out area of values. So this is clearly an area of value because we had a double bottom, right? Yeah, so we had a double bottom here on gold. So we had a double bottom here on gold, which corresponds to this area of value because it acted as a resistance here and now as a support here. So this can either be called a flip zone, it can be called a demand zone, or it can be called an area of value. So we bounced up this level, sending price higher. So this would have been a good level to go long in continuation of the trend, right? So another case study is that you can also spot out chart patterns on the higher time frame, right? So remember, we're not analyzing charts on the higher time frame to open trades. We are only trying to get as much information as we can as possible. So this is what you do on the higher time frame. The higher time frame is meant to give you more information on the chart, help you get better trade opportunities, right? When you go down to the lower time frame, that's simply what the higher time frame is meant for, to give you more information on the chart before you finally execute those trades. So now going on to the lower time frame, which is where we are going to look for trade opportunities, right? So I'm going to start from the 4-hour chart. So the 4-hour chart is going to break down everything we have on the 12-hour chart or daily time frame in order for us to get good trade opportunities. So on the 4-hour chart, you can see this symmetrical triangle is clearly visible now. So if you take a look at this price level, you can see that this is also a significant area of value, right? So we had multiple price rejections at this level, so you can even pick out these lows. So this looks like an ascending triangle. So if you go down to the, let's say, 1-hour chart, just to show you something real quick, right? So on the 1-hour time frame, you can see this is an ascending triangle. So after this bullish move here, we had an ascending triangle with a bullish breakout, which was an opportunity to go long. So this is what the lower time frame does for you. It gives you the best time to open your trade, right? It gives you the best trade opportunities. But we already determined from the higher time frame that is a bullish trend and price is likely heading towards the all-time highs. So that's the information we got on the higher time frame, which is helping us carry out these trade opportunities on the lower time frame. So let's say you missed out on this ascending triangle, right? I'm going to get rid of this line. Now we have a symmetrical triangle as we saw on the 4-hour chart. But going out to the 1-hour chart, we are picking the highs 1, 2, 3, 4. So we had 4 price rejections from this resistance level, right? From this sloping trend line for the symmetrical triangle. So what I like to do is I like to take 2 lines, right? Because the 2 lines gives us a range in which we are going to carry out our trade. So I talked about this in our our content on Instagram. So we talked about how to draw trade lines, how to trade chart patterns and all that. If you're interested in learning to trade forex like a professional, we have a complete forex trading course for traders. Check that out on Udemy. I have attached the link to the course in the description below. So moving on, this is our symmetrical triangle. So the reason why we try to execute trades on the lower time frame is because it helps us get the best trade entries, right? So for the lower time frame, we are focusing on getting trade entries. So I'm going to go to the 4-hour chart once more to show you something really quick. So on the 4-hour chart, we know we have a symmetrical triangle, but how do we enter a breakout trade? Let's say, for example, you're a breakout trader and you want to go long on this symmetrical triangle, right? I'm going to get rid of this area of value. I'm going to talk a little about this fake out in a bit, but before then, let's say we have this symmetrical triangle and you would like to go long. So the best way to go long is going long when price breaks through these highs and breaks through this trend line with a good candle close. So if you are focused on the 4-hour time frame, it means you will have to open your trade at this price level or wait for a retracement, because this is where we had our candle close after the breakout. So this is the reason why we pay attention to our trade executions on the lower time frame. So on the 1-hour chart, for example, you can see the 4-hour candle has been broken down into different candlesticks. And you can see that on the 1-hour time frame, we actually had a candle close above the trend line and above these highs. So at the close of this 1-hour candle, if you're an aggressive trader, this would have been your entry, right? Now, if you entered here, this is actually how I made 300 pips on gold this week, and I shared that on our Discord. So if you're not on our Discord, check out our Discord with the link in the description below. So use the link in the description below to get access to our Discord. It's free. So we jumped into a trade here and I took out 300 pips here. I shared that on Instagram as well. So the reason why I was able to take advantage of this trade was because I was paying attention to the 1 hour time frame for a trade entry, and I got that when we had a candle close above this trend line, also taking out these highs. So this is what you do on the lower time frame. So the lower time frame is meant to help you pick trade entries. You can even go as low as the 30 minutes time frame, but for gold, I do not like to trade below the 1 hour time frame because gold is a very volatile commodity, right? But you get the point. So the point is that the higher time frame helps us, get more information about the chart to help us better plan our, trades. While the lower time frame is where we go to pick our trade entries, because it breaks down the candle into smaller bits, which gives us the opportunity to, take those trades. Some traders like to call them sniper entries, right? So the reason why we wouldn't have fallen prey to these fake out here is because on the higher time frame we already knew that is a bullish trend, and any possible breakout below could be met by an aggressive move by the bulls, because the bulls are in control. So that's what we saw on the 4 hour time frame, right? So going to the 4 hour time frame once more, you can see it's a bullish trend, right? I'm going to zoom out so this is clearly visible. So on the 4 hour time frame, this is a bullish trend, so price creating higher highs and higher lows, right? So what you do is you just follow these bullish trends with chart patterns. That's what I do because I'm a breakout trader, right? So lastly, I'm going to talk about some misconceptions when it comes to trading chart patterns. When I send trade tips, regarding different chart patterns like ascending triangle, rectangles, consolidations, and all that, traders tend to ask, what's the time frame? What's the time frame? What's the time frame? The truth is that chart patterns can be formed on any time frame. So when you see a chart pattern on 1 hour time frame, it also means that chart pattern can also be formed on the 4 hours time frame. It can be formed on the daily time frame. So it doesn't mean you have to stick to those time frames to carry out your trades. Like I said, you go down to the lower time frame, right, to get the best trade entries for those trades. That's the reason why we trade lower time frame. So lower time frames are not supposed to be your base focus when you carry out your market analysis. Your market analysis should be done from the higher time frame down to the lower time frame. So another question I get asked most often is that, what time frame should we focus on? Do you have to go from the weekly time frame to the daily time frame, then to the 12-hour time frame, to the 6 hours time frame, 4 hours time frame, and so on? It doesn't have to be like that, okay? You just have to go as high as possible till you get enough information to satisfy your buyers, while you're either going long or going short. So if you get enough information on the 4-hour time frame, then good for you. If you get more information on the daily time frame, then it's better. If you know you have to go to the monthly time frame to get enough information to open a trade on the 1 hour time frame, then good for you, because charts are different. So like on this analysis, we are talking about the gold chart. So Euro USD, GBP USD, USD CAD, whatever chart you are trying to trade on, they have their own different price action, right? So you might need to go as high as the 1 week time frame on gold, but you might just need to go as high as the 4 hour time frame on USD CAD. So it depends. So remember, the goal here is to get as much information possible that will help you carry out the best trades, right, on that particular chart. So higher time frame are meant to give you more information on the chart, while lower time frame are meant to serve as the time frame where you execute your trades. So that's the reason why it's important to carry out trades on multiple time frames. While as for paying attention to these chart patterns can be formed on any time frame, right? So just because you saw a chart pattern on 1 hour time frame doesn't mean on the next chart or the next currency pair you have to focus on the 1 hour time frame to see those chart patterns, right? So if you pay attention to the daily time frame, you can also see chart patterns on the daily time frame. If you pay attention to the 4 hour time frame, you can see chart patterns on the 4 hours time frame. So what's most important is how you execute trades based on these chart patterns. So that's it briefly for this video. I believe this has been helpful. I've had a ton of questions relating to how to trade multiple time frames. That's why I thought it's best I put out a video to properly explain how it works when carrying out analysis. So if you take notes, you will see that this chart has no indicators, right? Because what we just did is naked price action. So it's called a naked price action because we do not really need indicators for this kind of analysis, right? So what you can see is that this is a good chart. So even if you go long around this price level, so let's say for example we have this consolidation like this, and then we tend to get a bullish breakout for a good trade opportunity on the 1 hour time frame. So just because we pay attention to the higher time frame, you already know this is a resistance level and you are likely going to close your trades around this level. So that's the reason why it's important to pay attention to the higher time frame, because if we don't, let's say I take out the resistance, if you don't, you would just go long and hold your trade not knowing that there is a resistance level around this price level. You get? So this is just an illustration to help you understand why it's important to, you know, go through the higher time frame to understand what's really going on with the chart, or to get more information on the chart before executing your trades on the lower time frame. Once again, guys, if you love the content, please like, subscribe, share your thoughts on the comment section down below. And if you're interested in learning to trade like a professional, check out our course on Udemy. I promise you, you're going to learn a lot, right? So that's it from me on this video. I'll try to put out more video as we move forward with the week. And once again, watch out for our weekly analysis coming up on Sunday.